So, good afternoon, everyone. I hope my voice is clearly audible. Can someone tell me whether my voice is clearly audible and is this screen clearly visible to you? Okay, thank you. So today's topic of discussion, as most of you who are aware about the RBI examination syllabus, as you all know, the Monetary Policy Committee is a very important topic, not only in objective as well as in descriptive paper. And being aware about every Monetary Policy Committee meeting that happens every 2 months. Okay, so that's also an important aspect in your preparation with respect to RBI, because you get to understand how does RBI Monetary Policy Committee actually works, what actually it puts decisions about, and how does the decisions impact all of us, not only in terms of our daily lives but also in terms of markets, external markets. Okay, and does Monetary Policy Committee only talks about inflation, or does it also talks about other aspects of regulations in general? So those things are important for us to do. Okay, that's why we are discussing this topic, which is RBI's Monetary Policy Committee. Okay, so first of all, before going into today's meeting, what actually happened in today's meeting, what did RBI actually come up upon, what policy rate it actually focused upon. Before all of this, let's focus upon the little bit static of Monetary Policy Committee so that we get aware about what exactly does Monetary Policy Committee do. So Monetary Policy Committee, it was actually established in 2015. Under section 45 ZB of RBI Act 1935. Okay, so this was the foundation of Monetary Policy Committee. What was the objective? The objective for the Monetary Policy Committee was maintain price stability while keeping in mind the objective of growth. While keeping growth. That means the sole responsibility of Reserve Bank of India's Monetary Policy Committee is to control inflation. And how does it do that? Obviously, there must be some particular target that within which RBI has to maintain inflation in the economy. So that target is 4 plus minus 2. That means inflation must be kept between 2% to 6%. And if we are talking about a particular percentage, obviously it will be some particular metric that RBI Monetary Policy Committee utilizes. What is that inflation metric that it actually utilizes as a benchmark? That inflation metric is CPI combined. Isn't it? And this is with respect to the end goal. But what about, methodology? How does the RBI's Monetary Policy Committee actually, come up with this inflation? What tools does it use so that inflation stays within the mandated limit? So the key policy rate that RBI in every meeting decides is repo rate. Okay, and rest of the rates, such as, let's say, standing deposit facility rate, as well as marginal standing facility rate, are all dependent upon this repo rate. And how is it dependent? So if repo rate is, let's say, 6%, Then standing deposit facility will be 5.75 and marginal standing facility shall be 6.25. That is 25 basis points differences there with respect to standing deposit facility and marginal standing facility rate. Okay, so this is all about a little bit of static with respect to Monetary Policy Committee. Okay, now let's see what actually happened in today's meeting. What does the governor talked about? So one of the things, or you can say it was obviously the continuation of whatever the policy rate has been there since past 3 or 4 policy rates. The policy rate, the repo rate has been kept unchanged by the Monetary Policy Committee at 6.5%. Okay, so naturally if you have to add or deduct 25 basis points, so you will be getting SDF rate at 6.25% and MSF rate at 6.75%, because the policy repo rate is 6.5% and it has unchanged. That means in the previous meeting also this rate was there. So for the upcoming examination, obviously you need to take care of the track of these rates. The definition of these rates, understanding of these rates are important for you, and not only understanding but also these key numbers are also important for you. So if your exam is in let's say next year's June, okay, so in April most probably there will be a meeting. So the latest meeting is the most important for you for the upcoming examination of RBI. Okay. Now with respect to what these rates are, if you talk about standing deposit facility rate, it's a tool used by RBI to absorb liquidity. Now what do we mean by absorb liquidity? Anyone wants to discuss with me? What do you mean by absorb liquidity? Or for that matter, does anyone know about what liquidity means? So I'll tell you. So absorb liquidity means RBI is actually telling you this is the tool through which you can park excess funds. Okay, liquidity means money, obviously. Yes, correct. A lot of money is present in the economy. Okay, so to reduce that money from the economy and park it with Reserve Bank of India where it is not being used in the economy. Okay, that is a phenomena used by RBI through SDF rate. And how does this actually function? So banks can park their fund with RBI, and this is at the rate standing deposit facility rate of interest. Okay, this is what the rate of interest that they get. And then what is marginal standing facility? So marginal, usually repo rate does what? Repo rate allows banks to get money from RBI against collateral. Okay, so this is one thing. But what if the interbank liquidity dries up? And what do we mean by interbank liquidity? RBI is not the only agency with which bank actually buys money, gets money. Bank also, interlend amongst each other, but that interbank liquidity actually dries up. Then through this MSF rate, banks can go to the RBI and get excess amount of money. Okay, so this is what MSF rate is. Another important thing that MPC came up about in this meeting, it says that we are actually focusing upon withdrawal of accommodation. So what does it mean? As most of you must have seen that there are two kinds of policy. First is monetary policy, first is hawkish policy, then there is dovish policy. or you can say tightening policy, or loose policy. So when the Reserve Bank of India is actually following a monetary tightening policy, that means they are increasing the interest rates and reducing the liquidity in the market or in the economy. Okay, and then if they want to increase the liquidity in the economy, they will follow a dovish policy, that means reducing the interest rates. So reducing interest rates and increasing liquidity, also known as accommodative policy. Okay, and the opposite case is withdrawal of accommodation. That means RBI is saying we are still on withdrawal of accommodation. That means we will not go to accommodative policy. We may go to increasing monetary policy tightening. We may still increase the rate. We will not decrease the rate, because still our stance is withdrawal of accommodation. Whatever liquidity that we have already provided to you, we are withdrawing that. We are still focusing upon increasing interest rates. Okay, so this is what we mean. And this is obviously RBI is saying that we will first oversee what's the inflationary conditions in the economy are, and then we will take a decision with respect to that. Okay, so these are the three main highlights of this year's RBI or this month's RBI Monetary Policy Committee report is. And apart from this, obviously, there are other aspects for us which is important. In the Monetary Policy Committee, RBI talks about what's the situation in global economy and what's the situation in Indian economy. And then they give their outlook with respect to GDP as well as inflation. So we have to oversee them. So I'll just give you a brief about what RBI thinks of global and Indian economy. So to global economy, RBI thinks that obviously the inflationary conditions are a little bit, reducing, but they are still above the mandated target. Okay, and obviously the global demand are still subdued. This is what the global economy is as per RBI. And one of the important things as per RBI is saying that emerging market economies are still feeling the brunt of volatile, funds. What does we mean by volatile capital flows? So the foreign institutional investors are actually, pumping and dumping a lot of money in different emerging market economies, capital markets. Okay, and because of which there is no stability in their capital markets. Okay, so this is what the global economy is all about. But what is the status of Indian economy? RBI says Indian economy is showing resilience, obviously, and the inflation rate has come down significantly because of the slashing of prices of vegetables. Because usually what does contribute the most in case of inflation in India? Food and crude oil. Okay, even in, let's say 2 months back, you must have heard about tomatoes prices spike in India and onion prices spike in India. Okay, so because of which inflationary conditions were, dire back then, but right now inflationary conditions have been reduced, you can say. Okay, and based on all these conditions, but for us what is important is that what the projections RBI gives, and I'm explaining it to you right now here. Although this monetary policy committee is not near the exam, another monetary policy maybe in April that will come near your examination, but what you have to focus over there is real GDP projections, inflationary projections, the three major highlights, and apart from that any other regulatory interventions that RBI has actually done in that particular monetary policy committee. Okay, so real GDP growth. Okay, so for 2023-2024 is projected at 7%. Okay, this is yearly GDP growth. That is the most important. That should be the most important for you to remember. And with respect to the next year financial year, and this is quarterly only, 6.17% for quarter 1, quarter 2 6.5%. Okay, but please remember this one, at least yearly one. Then similarly, with respect to inflation, the projections are 5.4% for this financial year. Okay, and next year, quarter 1, 5.2%, 4% and 4.7%. All of these things are within the mandated target of Reserve Bank of India, which is 2 to 6%. Okay, so the next GDP, it's 7%, inflation, it's 5.4%. Remember this and try to see again and again. Sujay, we will post it tomorrow. Okay, tomorrow we will take a live session with respect to PYQs of FM. Okay, so keep a track of these indicators as you see the upcoming Monetary Policy Committee. Since this is December, so upcoming will be coming in February. Okay, so make sure, since all of you are preparing for Reserve Bank of India, make sure to see the highlights of February Monetary Policy Committee and track changes, how it is actually changing. Okay. Now, the most important and although the last thing, but not the least thing, these things are important in every Monetary Policy Committee. Okay, you cannot skip any Monetary Policy Committee's other measures. Always this is important because this actually becomes a circular kind of thing, and it keeps on, just like how RBI says that we will actually adopt a 4-tier structure with respect to urban cooperative banks. They announce it first during any Monetary Policy Committee, and they says we will put it out a master circular in the upcoming 1 or 2 months. Okay. Yes, Sujay, correct. You're trying to hedge risk, averse risk. So first thing is what? Review of the regulatory framework for hedging of foreign exchange risk. First of all, obviously they're talking about just tell me which pen is actually doing good. I guess black is all right, no? Black is fine. Okay. Chalo. So they are saying, first of all, foreign exchange risk. What do we mean by foreign exchange risk? So it tells you about any risk associated with, So it tells you about any risk associated with, volatile exchange, foreign exchange. Now let's take an example. Let's say you are doing transaction, Maruti Suzuki is doing a transaction with, let's say, General Motors in USA. So Maruti Suzuki says in India. So the naturally transaction will be in dollars. So rupee has to be converted in dollars. Right now the rupee and dollar conversion rate is what? Does anyone remember what is the conversion rate of dollar to rupee? $1 is how many rupees? Around 83. Okay. Let's say they want to do a transaction of $1 million. And they agreed upon in the contract that once you Maruti Suzuki says that once you deliver the car, then we will pay you $1 million rupees. Okay. But US will say, or Maruti Suzuki will say that although we are agreeing upon with you about $1 million rupees, but in future, if this $1 million rupees or $1 to rupees exchange rate appreciates or depreciates, it actually changes the value. अगर ये ज्यादा हो गया तो मारुति सुजुकी को ज्यादा पैसा देना पड़ेगा. If $1 becomes 100 rupees, then it will be loss for Maruti Suzuki. Or if $1 becomes 70 rupees, it will be loss for General Motors in USA. So this is what currency risk, foreign exchange risk is. Okay. And now, how do we hedge it? How do we make sure that this doesn't impact the value of transactions? So there are some derivatives also. Some of the examples are forward contracts, and what do we mean by that? Let's say Maruti Suzuki and USA has come to an agreement that this today's exchange rate, okay, it will be fixed when we will do the transaction later on. This is one thing. Yes, Sujay, correct. Futures and options. Okay, and this is one option, and other thing is options. And what does option allow you? It allows you options with respect to Maruti Suzuki says that while we are doing this, although today it is 83.23, but if it increases, if the exchange rate increases, then we will utilize our option and we will pay you at this. But if it doesn't increases, we will not utilize the option. And for not utilization of option, USA will be getting something a little bit. So that are different methodologies to hedge market risk. Okay. So now what is actually happening here? RBI is saying that we will review the regulatory framework for hedging of foreign exchange risks. Okay. And just a normal circular it will come, and that will tell you about the exact details that what exactly is being happening. But actually what will it do? It will increase operational efficiency, ease access to foreign exchange derivatives, especially for users with small exposures. Okay. So just like how SEBI has been continuously doing, a lot of regulatory changes in order to make all the markets accessible to retailers. So that thing will also happen here. Next thing is framework for connected lending. Okay, I'll just give you a brief what is happening here. So RBI is actually trying to make a particular framework with respect to connected lending. They want to make sure that connected lending are standardized. Okay, because there is no formalized rules in place of that. Now what is connected lending? Let's take an example. I have actually developed a bank. Let's say take an example of Uday Kotak. Uday Kotak already has a bank, Kotak Mahindra Bank. Okay, and let's say Uday Kotak has started a new venture with respect to green energy. Now Uday Kotak want to establish a new plant, and if it goes to Kotak Mahindra Bank and want to take a loan, so that will be called as connected lending, because you and the bank are known to each other, and because of your known relationship, you are actually trying to utilize a favorable loan terms. This is what RBI wants to avoid. RBI is saying that the lender and the debtor should always have a arm's length relationship. Okay. So this is what this framework is all about, to reduce connected lending, because this naturally goes for increased NPA, and to increase stability in the banking system, RBI wants to establish a framework with respect to limited in scope connected lending. Okay, any confusion to any one of you with respect to connected lending? Or is this clear? Chalo, ठीक है. Next, we have regulatory framework for web aggregator of loan products. Can you give another example of connected lending? Okay. Just give me a sec. So let's take an example of Reliance Industries. Okay, so they have a plant in Jamnagar. Okay, and Reliance Industry also have a subsidiary called Jio Finance. Okay, so Jio Finance, what does it do? It lends money. And let's say, assume Jamnagar, Reliance wants to extend this Jamnagar facility, add one more factory nearby. And for that, they need money. Obviously, they need money from the banks. Okay, so if they go to a random bank, let's say HDFC Bank, which is not related to Reliance Industries or which is not related to Mukesh Ambani, so they'll get a loan terms such as interest rate, rate of interest and tenure like any other customer would get. But what if they go to Jio Finance? Because the board also is almost similar. It is within the family also. So they'll just ask this Jio Finance company to give favorable terms with respect to loan. If HDFC might give 8%, Jio Finance will give 6%. And when you have a lot of money, 1 or 2% will make a huge difference. And they can also increase the tenure, let's say 30 years. So the same factory will get a lot more easy loan from related bank. The key term is that the debtor and lender are related. And when this happens, this is known as connected lending. Now, is this clear? Hi Sai, how are you? Long time no see. How was your exam? Sujoy, is this clear to you? Hedging in foreign exchange happen with government or NSE. So there are, Karthik, there are two kinds of hedging facilities. Obviously, you have one over the counter and then you have exchange traded. Just like forward and future options. Okay, so in over the counter, it's between two parties and it is offline, just a contractual, just me and you doing a hedging and nobody knows about it. But in exchange traded, future contracts are present, but they are on National Stock Exchange. So you have to become a participant and then do the transactions on that place. Okay, so this is the major difference. Yeah, we'll continue the classes. Don't worry. Okay. So this is what connected lending is. Now, next thing is web aggregation of loan products. Okay. So RBI is saying we will come up with regulatory framework for WLP. Just like RBI has a regulatory framework for UCBs, NBFCs, account aggregators also, even digital lending products. Okay, so same thing, RBI is saying we will also come up with web aggregation of loan products. What is this web aggregation of loan products? WALP. Imagine a single website, okay, which actually gives you details with respect to loans in each category: car loan, home loan, personal loan, and also, let's say car loan, if they are talking about, they also offer you car loans of different companies. HDFC offering you how much percentage in car loan? ICICI, then PNB, SBI. So this is aggregation of loan providers or the details of loan provided by different banks on a single platform, just like Policy Bazaar. In Policy Bazaar, you get details of every insurance company's insurance details. So same cases with lending, loan providers, aggregators. Okay. So to regulate such entities, RBI is saying we will come up with a regulatory framework. And as and when RBI will come up with a regulatory framework, we will discuss it again. Okay. But I hope you get the idea what is happening here. Next is payment systems and fintech, and in this, enhancing UPI transaction limit for specified categories. Now let's see how many of you remember from the financial inclusion classes that we did earlier. So UPI limit for normal transactions is how much? Does anyone remember? What is the UPI limit for normal transactions? No, 5,000 nahi, it's high. Chalo, one information I can give you. UPI transaction limit is 1 lakh. Basic. Okay. But in cases of few categories such as giving to mutual funds, the transaction limit is how much? Two lakhs is for mutual funds, capital markets and other transactions. Okay. But what about IPOs? If you want to transaction, if you do a transaction with respect to IPOs, how much limit is there? It is 5 lakhs. Okay. Now RBI is saying there are some other services also where we want to increase this 1 lakh limit. And what are these other services? These are health and education. So this, remember this is a very probable question for the next year RBI examination. Okay. So what is RBI saying? See here. To encourage the use of UPI for medical and educational services, it is proposed to enhance the limit for payments to hospitals and educational institutions from 1 lakh to 5 lakh per transaction. Yes, correct, Karthik. Okay, so remember this, don't forget, for medical and educational services, it has been increased to 5 lakh per transaction. Next is e-mandates for recurring online transactions, enhancement of limit for specified categories. But first of all, tell me what is e-mandate? Anyone? for recurring transactions. Chalo, don't explain it to me what it is. Just give me an example. Any example that you can think of with respect to recurring transactions mandate? Any example? Think about any example where you have to pay, a fixed amount of money every month in your daily lives. Think in terms of your entertainment. With respect to your entertainment, what is such type of transactions where you do have to pay per month? Let's say Netflix subscription. If per month have you taken? Okay, so when you put or Hotstar subscription. So when you pay for these subscriptions, you obviously put a mandate on your UPI application, which for a fixed period of time every month deducted from your account automatically the amount of, amount relevant for these subscriptions, isn't it? And obviously there's a limit with respect to this. Maximum amount per month that can be given to these subscription models is, as RBI says, it's 15,000. Okay, but RBI right now thought that we need to increase this limit, or we need to exempt some of the categories with respect to this limit. Or what can be those categories? Let's say some of us also invest, some of us also provide premium to the insurance companies with respect to our insurance. Okay, so for those kind of categories, RBI says that these things are exempted. So what does it say? It is proposed to exempt the requirement of AFA. What is AFA? Additional factor of authentication, which is 15,000 for transactions up to 1 lakh rupees for following categories: subscription to mutual funds, payment of insurance premium, and payment of credit card bills. So remember these three things only: mutual funds, insurance premium, credit card bills, and maximum limit is up to 1 lakh rupees. So what does it actually really means? So let's say if you want to do per month SIP into a particular mutual fund, okay, and you have set a monthly SIP of 50k, but since AFA is already installed with respect to 15,000, okay, so whenever every month when the fund house will ask your UPI that money, an additional factor of authentication will be required. That means a notification will come to you and you have to put in your PIN, and then only money will be deducted. Okay, but RBI says up to 1 lakh rupees, and since this is also 1 lakh rupees, and in three categories: mutual funds, credit card bills, and insurance companies premium, okay, this additional factor of authentication will not be required. That means every month this amount which you have set will be deducted automatically without any factor of authentication in those three categories. Again, I'm saying in those three categories: insurance premium, mutual funds, as well as credit card bills. Okay, I'll tell you the difference. say, let's say, since we are talking about only in mutual funds, coin is the application, or there are various applications such as Grow also, okay, where you put in your money from your bank account to put it under a fund, let's say an index fund, okay, where you think as the Nifty moves on, your fund, your whole money will also move on. So to do the initial transaction or one lump sum transaction, the RBI says the limit is 2 lakh rupees. Okay, but when you do recurrent transaction without you knowing, okay, that means you put in a e-mandate, you put in a mandate. And what do we mean by mandate? Just like in UPI, you must have known about auto pay settings. You clicked on auto pay and you don't have to worry about for your whole year, every month the amount will be deducted. Okay, so that is one thing, and you doing transaction on your own, that is another thing. Okay, so the difference is between in what manner you are doing transaction. In a transaction, you are doing transactions in a single manner and directly to the between your bank account and the agency. This is 2 lakh rupees limit. But if there's a mandate, that's a different thing. Yes, Karthik, like SIP every month. So for SIP, okay, you will be obviously, and in SIP there will be two things. If you put a mandate in your bank account, then only 1 lakh rupees limit is there. But if your SIP every month gives you a notification and then you have to pay, then you can change the amount as well. And it's only about auto pay settings that you put into any application in which you do transaction with. Okay. Is this clear? Okay, now let's move on to the next thing, which is establishment of cloud facility for the fintech sector. So RBI is saying, since a lot of fintech companies are actually, coming up with a lot of data, they have a lot of customers' data, and they are utilizing those data and storing those data with respect to either public cloud infrastructure or some private companies' cloud infrastructure. So RBI is saying we will, give a subsidiary of RBI an opportunity in order to establish a cloud infrastructure only dedicated for fintech companies. Okay, so this is what that another initiative was all about. To like transaction. I cannot see 2 lakh transactions mean per what? It's per transactions. Okay. And last thing is setting up of fintech repository. This is the last thing. This is what last thing actually RBI governor told today. So the RBI governor wants to establish a particular fintech repository, a repository where a lot of fintech companies, a lot of innovations that they do, that they can share with respect to all the new entrants or all the other, competitors, that they think that this won't hamper their business, but this is a very good practice in the fintech industry they can share. Okay, so there are a lot of examples of best practices, such as you all must have heard about Niti Aayog coming up with a report where they list a best practices happening in a lot of sectors such as social, environment, women empowerment and others. So similarly, RBI Governor says we want to establish a repository which contains best practices across the spectrum. Best practices, let's say in payments, insurtech, digital lending and others. Okay, where all the stakeholders involved in fintech industry, they can access those best case studies and they can learn from them, they can utilize them and they can do innovation further. Okay, so this is what RBI Governor suggested, and there will be a particular guidelines will be issued separately, and as and when the guidelines will be issued, we will discuss it again. Okay, so that's all for today's lecture. I hope you understand what's important in RBI Monetary Policy Committee's highlights every 2 months. Okay, so always remember the key indicators, the repo rate, the policy stance such as withdrawal of accommodation, also GDP projections, inflation projection, and lastly, what are the various initiatives that RBI Governor talked about that will come in the regulatory framework. Okay. Anything else you want to ask? And if you have any confusion, please ask. Otherwise, we can end this session. Class for NABARD 24, how to prepare. Okay, Karthik, I'll ask Ashok sir. He'll take a comprehensive class with respect to upcoming or next year's NABARD. Okay. Okay, so don't worry. Keep on giving every examination. Okay. Remain in the cycle, and you'll clear. You'll definitely clear. Don't worry. Anything else? Is the result out about NABARD? NABARD result, it will take 1 month. It will take 1 month. So most probably by 20th it will come. 19, 20. Okay. Chalo, thank you guys for joining. We'll meet tomorrow, and tomorrow we will do previous year questions of finance and management for RBI. Okay. So let's meet tomorrow. Thank you.